All right, so we're actually live now, Jeff, and we're going to wait till the 10 o'clock mark on the dot to dive into the subject matter. And so while we're just waiting for some folks to jump in, we'll have various folks clicking uh, to begin their broadcast probably over the next several minutes. Just let everybody know what's going on in your world right now. What you got going on?
I live in the compliance world. So I was chief appraiser up until about 5 years ago when the compliance got way too much. And we actually had a couple clients that demanded we have a dedicated resource to compliance. So, um, with all the states having AMC regulation and everything that's going on, uh, that keeps me pretty busy. The subcommittee just released their rules for the federal AMC fee that the states will be collecting and transmitting uh, back to the subcommittee. So that's a big topic of conversation right now.
Sure, sure. And we've got folks joining us minute by minute. We've got several viewers already. So, for those of you that are clicking in now, we're going to actually start the topic right at 10 o'clock. So you're kind of the early birds, which is great. I'm normally late for everything, so I'm early today, and you're early today, and we'd like to welcome those that are joining us. We have Jeff Dickstein in today, and we're excited to have him here. Jeff, you serve, or you did serve, I believe you're still serving on the BOT. Is that right?
I'm just finishing my first year on the board as a member of the board. Previously, I was with the Industry Advisory Council of the foundation, the past chair, vice chair, secretary. So I've been on the foundation for quite a while, but I'm finishing up my first full year as an actual board of trustees member.
Great. How's that been?
It's exciting. I'm enjoying it. We have our fall meeting next week, as a matter of fact, in Scottsdale.
Great. So you'll be in Scottsdale coming up. Where else are you going to be? If I know you travel a lot, I bumped into you. I
I'm
think
everywhere.
in
I
Kentucky, and then a week
Yep.
later in West Palm Beach. And
I
so,
will be
where
at
are you? Where are you
the
coming up?
I'll be at the Appraisal Summit in Las Vegas next week.
Great.
I speak there on Thursday, and then, as I said, I jump on a plane Thursday night to the Board of Trustees meeting in Scottsdale for our meetings are Friday and Saturday.
Very good. Very good. Well, I will see you in Vegas, and you'll exit the building right before I speak on Friday. But that's fine. You won't miss much. So that's fine.
Oh, come on.
Um. So how's the weather out there? You're in California, is that right?
I'm in Southern California. It's gorgeous every day, all day.
Yeah, I think it was 27 degrees this morning when I headed out, and it's starting to hit here. So
Yeah, we had a little heat wave for a couple days, which I know if you watched the World Series, you saw that. But,
right, right. So tell me and the, I don't know, 75 folks we have watching already.
mhm.
What position and what company are you with right now, and what do you guys do?
So I'm the chief compliance officer with Protect Valuation Services. So we're a full service appraisal management company. We've been around for, over 30 years now. We're
Okay.
privately held. Uh, Son took it over from his father. I've been with Protect for a little over 10 years now. They hired me as chief appraiser about 10 years ago. And as I said, I switched over to the compliance side about 5 years ago. Um, Previous to that, I worked for a couple lenders doing about 7 years worth of post-closing due diligence. So for the mortgage-backed security trades, I did diligence for that, as well as the tie-outs of those trades, and that dealt a lot with the loss mitigation valuations, default servicing. Before that, I had my own shop for a couple years, and before that, I was a staff appraiser for a mortgage company for 15 years.
Great. So you've kind of been around the block a couple of times. And that's
Well,
what
I
I,
tell I tell people I've been in the business since I was 18, which I started working for my dad, opening loans and processing and underwriting. So it's been a long time.
great, great. So you are still a certified appraiser?
I'm certified in 17 states right now.
Great, great. And so you're one of the guys. Maybe you're with an AMC, but you're one of the guys that can kind of relate to the practicing appraiser because you are an appraiser. You, as you mentioned, you were a staff appraiser for many years,
Yep.
and you were a fee appraiser. So you it wasn't that long ago. You know what it's like to be out in the trenches.
I absolutely know what it's like to be in the trenches. And when I had my own shop, I was a sole proprietor and I did, again, you're talking 15 years ago. I partnered with a few appraisal management companies just as part of my business model.
Very good, very good. Appraisers tend to have a bad taste in their mouth about AMCs,
I
and
support
and sometimes that's rightfully so, maybe sometimes not. And we're looking at maybe having some folks on in the future on that topic. It's no secret how I felt about, for the most part, the AMCs. I'm actually in the process of writing an article that's uh, basically it just says, can't we get along? and
that.
and AMCs are here, they're big business,
Hmm.
and we've got to find a way to get along. And I will say this: I know a lot of folks that are affiliated with AMCs. There's certainly some better to work with than others,
Absolutely.
and there's probably some appraisers better to work with than others.
Absolutely.
So we've got to just kind of figure out a way to get along, if you will. And I think maybe there is an answer. We've just got to try to figure that out. What are some of the common issues? You're a compliance guy. We've
Hmm.
got about 3 minutes before we actually dive into the subject matter of as to why you're here today. But during the next couple of seconds, why don't you tell our viewers what are some of the common errors that you have seen over the last many years with compliance issues from the practicing appraiser?
My biggest challenge right now is because so many state AMC laws and rules, we have to audit appraisal reports that are
Hmm.
prepared by our panel of appraisers.
Right.
Uh, we audit those for compliance with USPAP.
Okay.
It's not a value validation. It's not a methodology assessment. It is for USPAP compliance.
Right.
Um, and unfortunately, that's where we see the biggest amount of errors. It could be as simple as an appraiser not putting in a prior service comment,
Mm.
highest and best use.
Yeah,
Um,
that's a biggie. Biggie. That's a
yeah,
biggie.
exposure time, and while it, it might not affect the final value opinion, at
Mm.
the end of the day, black and white, it is about is it a violation of USPAP? Yes. Some states it's mandatory. We're supposed to mandatory report that.
Mm.
Um,
Hmm.
so that's our biggest challenge is the USPAP compliance. Methodology and comp selection is really up to the appraiser, and that's what we rely on that appraiser to do. Where it comes down to black and white is the USPAP.
Right. And you mentioned highest and best use, and let's just talk about that for just a real quick second, and then we're going to
Mhm.
dive into the subject matter.
Yep.
So the highest and best use is really one of the number one areas that appraisers struggle with,
Hmm.
and I think the reason, Jeff, is that the form that we all fill out every day
Yep.
ask a question. Is the present use the highest and best use? Yes or no? And if you check no, there's a box there for you to elaborate. But if you check yes, it appears via the form you're done.
You're
And
done.
quite
Right.
frankly, you're not done.
Yep.
Standard Rule 22A, Roman numeral 10 says you better put your support and rationale there. So, how do we get the word out to these folks? I mean, it's a consequence of USPAP requires it, but the pre-printed form doesn't. And appraisers really need to be aware of this is a time in which you better supplement that form.
Here's what I've screamed from the mountaintops, and I got to give some of you know Danny Wiley.
Mhm.
Uh, Danny was on the standards board for a while, but the problem is as appraisers when we take our 15-hour USPAP, it's usually before we are credentialed or licensed as an appraiser.
Right.
And to be honest, it's like French. you really don't understand it because you're not using it in live real world experience.
Right.
After you're credentialed, then you only change the you only do the updates, and it really doesn't get into the meat of USPAP. And that's part of the problem. You do your 7-hour update, and usually you stare at the clock and wait for the 7 hours to end. But you really don't ever get back to the meat and the potatoes of, for a residential appraiser, back to standard 1, 2, 3,
Right.
soon to be standard 1, 2, 3, 4.
Right.
And I think that's what's missing is a lot of appraisers have become so reliant on the form, thinking that the form is compliant with USPAP, and we're going to touch on that as part of the desktop discussion.
Right.
But we've got to get back into the standards and the book or a PDF and just dive back into USPAP.
Very well put. Yeah, I encourage folks, read the first 28 pages. If nothing else,
Yeah.
read standard 1, standard 2, and everything before it.
Exactly.
At least read that. Have you ever opened the book?
Right.
Quit using it as a doorstop. Well, we're going to get started with the subject matter, Jeff. We have lots of folks that have tuned in. It's actually 10 o'clock. I'd like to welcome all our viewers. My name is Brian Reynolds, and welcome to the Appraisal Report. The Appraisal Report is a free monthly webinar brought to you by Appraiser eLearning. So we're happy that you're joining in. We have a special guest today. Mr. Jeff Dickstein is with us, and he's going to be talking about a really touchy, hot topic, if you will, and it's called desktop appraisal. So first, Jeff, I'd like to just welcome you to the broadcast. Say hello to everyone, and if you're willing, let them know how they can reach out and get in touch with you.
Well, good morning, and thank you for having me. As stated, my name is Jeff Dickstein. I'm the Chief Compliance Officer with ProTech Valuation Services. I can give you my email address. It's jdickstein@protk.com. That's usually the best way to get in touch with me is through the email.
Great. I would also like to remind our viewers that this session is being recorded. It will be available for a broadcast a little bit later on. If you have to just see a bit of it, or if you want to refer someone to watch this at another time, you can certainly do that. I'd also like to just make a quick little disclosure that Appraiser eLearning and Brian S. Reynolds doesn't necessarily agree with all opinions, advice, and commentary from any of our guests. And with that being said, let's just jump in here, Jeff. Also, I want to let the viewers know you can actually ask questions. We will probably get a few today. So we will try to answer all the questions. That's one unique thing about our webinars. We allow our viewers to ask real-time questions. We don't ask you to submit them a week in advance so we can think about it and look up an answer and that type of thing. We let you ask a question during the broadcast. And again, we'll get to as many of those as we can during the broadcast. If there's some we don't get to, Jeff or I will try to reach out to you individually. So feel free to ask questions. So let's just dive in. Jeff, let's just start out with what in the world is a desktop and why are they here?
So let's take the second part of the question first. Why are they here? As you well know, over the past few years, we've seen a lot of regulatory oversight since the collapse 07, 08. The agencies put out the Interagency Evaluation and Appraisal Guideline document in December 2010. Shortly after that, the agencies really started doing a lot of audits to the lending community, servicing community, capital market trades, to make sure that those institutions were in compliance with federal regulation, which is the interagency guidance. A lot of companies in the default space and capital market space were using either broker price opinions or AVMs.
Okay.
So if you read the interagency guidelines, a BPO is neither an acceptable evaluation or appraisal for the simple reason that it does not provide a market value. So it provides an anticipated sales price. So a lot of servicers, a lot of clients that service their portfolios had to switch from a broker price opinion to either an acceptable evaluation or appraisal. we've just seen a lot of shift to they want the expertise of an appraiser performing an appraisal. The majority of these desktops, and when I say majority, I mean 95% of them, are being done for default servicing or capital markets, where you have mortgage-backed security trades. You know, loans are being pooled, bought and sold. We don't see desktops in the origination side of things for you know, new purchase money, for refis. We do see it a little bit in the home equity line of credit, but it really is a big use in servicing default cap markets. And the reason is it's not a pass-through fee to a borrower or a homeowner. The lender, servicer, you know, Wall Street firm pretty much takes on the cost of valuation.
Okay.
So and a lot of times, you know, with trades, they need values within 48, 72 hours to validate these values for these mortgage-backed security trades. So they were looking for something that is a little bit quicker and cost effective. So the desktop was kind of born out of that.
Right. So let me just kind of recap what you just said so that I understand it, because I'm a little slow here. When you mentioned default servicing, and I would just venture to say that the majority of our viewers and most of my students in the live classroom, you know, Jeff, they do mostly mortgage work, but not from a default standpoint, but from a production standpoint. So they're doing purchase transactions, they're doing refinance transactions. And before I go any further, let me just say that we as human beings resist change.
Absolutely.
Especially appraisers. and guys, things are going to change whether you like it or not. Now, you can resist change or you can be open to change. You can keep an open mind. If you don't think things are going to change, look in the mirror. Things are going to change whether you like it or not. So right now, Fannie Mae is doing appraisal or doing buying loans without appraisals in some instances. They call it a PIW. We had a webinar on that last month. Property inspection waiver ought to be called appraisal waiver, I guess, because the inspection is just a small part of what we do. Right. But guys, I mean, they're making loans without appraisals at all. So what I'm hearing is that I believe said 95% of these desktops are done in the default sector, which if an appraiser is not in that space already, this actually could be an opportunity for them in the default setting. And I know we're going to really dive into this, and the questions are already starting to come in, but we just need to keep an open mind here. And then finally, I want to add to, you said it's not in the purchase or the refinance sector. And I would just add yet onto that. I think it's coming, Jeff. What do you think?
You know, I look like what we've seen with, as you said, with Fannie and Freddie. And both of them having an appraisal waiver program, is they're starting to really look at overall risk associated with making a mortgage transaction. So there's a lot of criteria that goes along with both Fannie and Freddie's programs for their waiver program.
Right.
You know, it's got to be existing, and you've seen all the criteria. But I'm sure even on the, you know, I could see it on the purchase money side, where if you've got a 50% loan to value with, you know, a borrower with impeccable credit, income, et cetera, and relatively low risk, I could see them definitely going to a desktop type product to just get a validation from a local area appraiser that the value is in the ballpark. I mean, it doesn't have to hit the target, but at least hit the tree. Especially on, you know, a 50% LTV deal.
So when we talk about risk, this is all a measure of risk. And I believe the viewers would even agree that going inside a house, and why do we do that? We do that to try to figure out the physical characteristics of the property, right? So if an appraiser is doing the traditional appraisal, if you will, where you go into the house, you take your notes, you take photographs to document what you see. That's probably a lower risk than a drive-by. I think we would all agree to that.
Mhm.
A drive-by is a little bit more risk than an interior. And
Absolutely.
then I would go forward and say probably a desktop is a little riskier than a drive-by. But I believe what you were saying is maybe you've got somebody that's lived in their house a long time. Maybe you have a transaction that was a cash transaction many years ago. They're going into a financial institution. They have impeccable credit. They want to borrow $25,000. I mean, what is the risk to that lender in that environment? So I get that, but let's ask. That's the risk to the client. Let's ask another couple of risk questions.
Mhm.
What Jeff, what is the risk to the public? And then finally, probably what most of our viewers want to know is, what is the risk to the appraiser in doing these desktop appraisals?
Obviously, the risk to the buyer, it depends on the buyer.
Sure.
Zach Dawson with Fannie Mae spoke at the Valuation Expo a few weeks ago. Their waiver program is just an offer of a waiver to their borrower. I believe, and don't quote me, but Zach said they only have about a 40% acceptance rate of the waiver, meaning the other 60% still want an appraisal done on their loan for that transaction. So it's still not widely accepted
Yet.
by the public.
Right.
As far as the exposure to the appraiser, again, the appraiser has to comply with USPAP.
Mm-hmm.
Definitely use of the extraordinary assumption and commentary is going to be the saving grace. And lately we haven't seen a lot of appraisers, I like to call it, painting a picture on their appraisal reports, and that's from a desktop all the way to a full 1004, et cetera. There's a lot of gaping holes on how the appraiser reached their final conclusions.
Mm-hmm.
And
Sure.
even on drive-bys and exterior onlys, we still don't see the use of the extraordinary assumption. And again, we touched on it earlier, but USPAP is it gives you direction.
Sure. Okay. So we talked a little bit about the risk. We've talked a little bit about who is wanting these desktops currently, mostly in the default sector. I envision that something is going to change. I mean, this is just my prediction, but we live in a world of instant gratification. I mean, we want it now. There's an app for everything. And I don't think clients are going to continue to wait 2 weeks or 3 weeks for an appraisal report. They're just not going to do it. So there's got to be a solution some way. We've got to get appraisers that are able to provide more product in a quicker time frame, or we've got to bring more appraisers in, or we've got to look at different types of products. And I believe that common sense would dictate the lower the risk associated with a transaction, maybe some of these different types of product might be an alternative. Jeff, I'm going to read you a couple of things that we got from a survey that we asked, and hopefully before the broadcast is over today, we can answer some of these questions. Okay, so let me just give you some of the results of the survey we took. You need to get that. That could be an order.
Nope, I
Okay.
just needed it.
I tell my students, I know if your phone's ringing, that could be opportunity cost. All right. So the first question we ask, and we got about 200 responses. So that's great. Thanks everyone for participating in our surveys. But the first question we ask, do you practice desktop appraisals? And the answer is actually, I'm surprised at the numbers, Jeff. We had 69 people say, yes, I do. And we had, of course, 129 people say no. So actually 35% of the appraisers say they participate in a desktop appraisal in some manner, which is really kind of, that's higher than what I thought we'd get. The next question we ask, and hopefully these are some of the ones that we can answer with you today. This is the question of those that don't do them. And we got 130 responses. So all of them plus one answered these questions. Why do you resist? What is it about this product that is turning you away? And these are the answers we ask. I'm going to give you the numbers. The number one answer, and it was the first question, the fee is too low. So I know you're going to speak on that in just a minute. The fee is too low. 63 folks said that. I make more money doing a URAR report. 25 folks said that. There's too much risk involved. 24 folks said that. And then finally, 18, the lowest number, but still a substantial number, said, I have to see the property. I have to do an inspection. And I used to be that guy. I mean, I'm a touchy-feely kind of guy. I like to see it and smell it, and before I sign my name to something. And I finally got over that by starting to have an open mind. But on some of these things, maybe you can address that. Let's start out with the first one. The fee's too low. I make more money doing something else.
I think, and I fell into this trap for a long time when I had my own shop. We base our fee on a product type, and appraisers have to figure out their hourly rate. What do you, as a professional real estate appraiser, what is your hourly rate for your appraisal services? You have to take a look at the time associated with the desktop. Obviously, you're not leaving your home. You're not leaving your office. Mm-hmm. So you're not going to drive the property. You're not doing an inspection. You're not driving comps. There's a lot of time saving there.
Sure.
So you really have to figure out what is your hourly rate, and then whoever you choose to work with for these desktop products, negotiate your fees. Part of the biggest challenge we have is appraisers, for some reason, don't think they can negotiate fees with appraisal management companies. I know my company personally, we do thousands of fee negotiations a month. And again, what they don't understand is we have contractual obligations with our clients, and that's pretty much where our fees are driven from the relationships with our clients. So anytime there's a fee increase for anything, we have to go back to our clients and get an authorization for that fee change. So we're constantly looking at fees. We're constantly talking with our clients, product types. So I would just encourage any appraiser to, figure out which AMC you want to work with, and talk, communicate. There's a negotiation that needs to happen.
Sure. And I ask my students all the time, how many appraisal reports can you do in a day? And when I ask that question, I mean the entire process. If you're a single person shop in particular, you get that order via an email or phone, you call, you set the appointment up. They happen to be there today. Say, come over whenever you like. You go look at the property. Maybe you've tried to guess what might be an appropriate comp before you go, and you take a whole bundle with you. You can't always do that because you get to the property and it's nothing like what you thought it would be. Mm-hmm. You take your photographs, or maybe you have digital and you can check the sales while you're at the curb. I don't know. But you gather all your data, you drive around the neighborhood, you come back, you develop your opinion of highest and best use, you start doing your analytics. You have a real good feeling about it. You put it together, you write the report, you sign it, and you send it. Oh, wait, you got a request for a revision. You do the revision and you send that back, and finally they accept it. How many of those can you do in a day? Mm-hmm. More often than not, Jeff, the answer to that question I hear is one. So I guess the question is, if you were just doing the analytics and the research without driving, as Jeff said earlier, obviously you could do more. And I don't know how long it takes to do a desktop. Maybe you can help us with that, Jeff. But, if you could do one in an hour, maybe.
I think that's what we're seeing, about an hour. And that's why I said if an appraiser can figure out their hourly rate. You gave your example of one a day, and let's say for sake of discussion, you get $500 for that appraisal.
Right.
Figure out your hourly rate. And we have some appraisers that can't get enough of these desktop products. They call us. They're hungry for them.
Yeah, the beautiful thing is you could be sitting on a boat doing these things, for crying out loud.
You absolutely could.
You know, I was in Florida last week. I could have been sitting by the pool knocking out desktops. I might start thinking of these things. I don't know, but you know, and I don't know fees, and we won't talk fees. But I'll just give if you charged $100 and you did 6 a day,
Hmm.
you're financially you're receiving more income than if you do the one URAR from start to finish.
And
I
even
don't
if you do them to supplement, downtime, if you've got a good base of business doing that 1004 work, URAR work, and let's say you've got a slow spot, or you want to do one a day just to kind of make up gaps in your flow of business.
right. You know, I had a lady, and I believe it was when you were up in the Cincinnati area. You know, I bumped into you up there, and you were speaking on this topic. And a lady, I believe she was one of your students, said, and this stuck with me. She said, "You know, I go on vacation with bring my husband, and he's a late sleeper." And she said, "I'm an early riser. I'm up and at him at 5 o'clock, get my coffee, and he sleeps." And so she said, so by the time he rolls out of bed and comes in, she said, "I've done 3 of these things."
Yeah.
And she says, "I'm ready to go shopping. Let's go."
Yep.
So that's the beautiful part. You can kind of do these from anywhere. And Jeff, we're getting some questions in. So I'll go ahead and ask you a couple of these real quick, and we'll knock out a couple of these. Chuck asked a question: is there a sample of a desktop appraisal on one of the government websites?
You will not find it on a government website. Um, Everybody kind of has their own form, I guess. Um, the Appraisal Foundation recently did 2 webinars. One was on evaluation, and one was on restricted appraisal reports. And you can go to the Appraisal Foundation website, and I believe the restricted appraisal report presentation they
Right.
did have some examples of some desktop forms that are out there. So,
Great.
but it's really a proprietary product that's offered by whomever's providing them.
Okay. I believe, and I may be wrong on this, but I believe some of the software vendors have some samples.
They do. I know both.
Okay.
Our form that we use is on both Alamode and ACI.
Okay, great. A couple of other questions, and they're starting to roll in here now. So, Janet says, unable to use an EA, I assume she means extraordinary assumption, unable to use an EA on a Fannie Mae appraisal. If Fannie Mae accepts and uses desktops, will they allow an EA?
Well, I don't think it's up to Fannie to tell you can't use an EA. That's compliance with USPAP.
Yeah, she says may not be USPAP compliant if we have to rely on a third party for inspection. I think that's where she was going with
Yeah,
that.
again, I urge you to go back and read USPAP. They address that. In fact, tell you what, I'm gonna.
Yeah, and I believe if you look down at the bottom of the URAR, there's 4 boxes you can check.
Yeah.
And I believe it's the last box, Jeff. The 4th box actually says I'm basing the appraisal on an extraordinary assumption. So
Yeah,
I believe they do allow those.
Yeah, read Advisory Opinion 2, and also FAQ 173. It specifically addresses drive-by and desktop appraisals.
Helen asked, will we be covered with our E&O for desktops?
You would have to contact your E&O provider. I mean, at the end of the day, you're performing an appraisal, and you are performing appraisal services as part of your business. It is an appraisal.
Right. So it should be covered under that, but of course we're gonna steer you to that entity. Mm-hmm. What company does he suggest for desktops?
ProTech.
That was an easy one, wasn't it?
Yeah, right.
All right. I tell you, before I ask any more questions, I know you have some slides or a PowerPoint that you have there, Jeff. Do you want to pull that up?
It pretty much covers what we've been talking about. I don't know if we need to pull it up.
Okay. Okay.
I did, and you've seen it, but a few years ago, I did a presentation in Las Vegas, And part of my presentation was I did a restricted appraisal report on a cocktail napkin.
Right. Right.
Just to show as an example that if you follow, standard 2, it did take 4 cocktail napkins, but you can provide a USPAP compliant report as long as you follow USPAP, and it's outlined, it's bullet points, it tells you what to do.
Yeah, and I think it all comes back to what I said a moment ago. We as human beings resist change. I mean, when I got in this business, I was taught an appraisal is, you go out, you measure, you take pictures, and then you put this report together. And the report contains a copy of the deed and the subject photos and the comp photos and a map with little rub-on arrows and things of that nature. And I think we are getting appraisers now to kind of look at other opportunities and keep an open mind. But for many, many years, I mean, that's all I offered. If you called me for an appraisal, that's what you got. I mean, I crammed that down your throat, whether you wanted it or not,
right.
Because I didn't know any better. I thought that was the appraisal, when in actuality, that was the appraisal report. It was the method in which I was communicating the results of my appraisal to my client. And I finally changed the way I conduct my business. There's a lot of folks that are homeowners thinking about selling their house. And do they really need a photograph of their own house? Do they need a floor plan they walk every day? Or, for crying out loud, we have GPS on our phones now. We don't need a map with little rub-on arrows.
I was just going to say that. I'm coming up on 30 years as an appraiser. And I remember when I first started, I spent hours in front of a microfiche machine,
Right.
trying to look for comps. And, I had to drop my film off at a developer and get, multiple photos. And I had a typist. I had to handwrite my reports, and I had a typist type them. I remember my very first computer program and digital camera. And you're right, people do resist change. But at the end of the day, change has got us to where we are now with, we've got some pretty slick appraisal software packages. People are using their phones to take photos. You've got electronic measuring devices. When I was a trainee, it was, here, hold this tape. You get the dumb end of the tape,
Right.
And that just doesn't happen anymore. And it has to happen through change. So I agree with you. And again, I'm kind of a USPAP nerd. And I think with my involvement with the Appraisal Foundation, I sit in a room at our meetings and we discuss exposure drafts for hours.
Mm-hmm. Right.
So, and like you said, as long as the appraiser does standard 1 and they're thorough in their development and their scope, reporting, there's a lot of flexibility. And that's
Great.
kind of where this desktop product falls into the reporting aspect.
Great. Jeff, in just a minute, I want to get into the nuts and bolts of this, how it works, how the process is, what type of approaches to value are we looking at. This is a non-Fannie Mae product per se. You're wanting it for default services and instead of production. So we're gonna dive into that here in just a second. I'd like to remind our viewers, this is a free webinar, the Appraisal Report. It's brought to you by Appraiser eLearning. We offer one every month, typically the 4th Thursday of every month. November, that would be Thanksgiving. So we may move that date around a little bit for Thanksgiving. If you have someone in mind that you would like to be a guest and us kind of dive into a particular subject matter, give us a call, shoot us an email. Or if you would like to be a guest, feel free. We love to have regular appraisers that are out there doing their thing chime in. So we welcome you in addition to some of the experts that we're bringing in from across the country. We've got, I think, 6 courses now, and we're approved in about 30 states. So we're probably already approved in your state, but if we're not, we'll be there soon. We should be in all 50 states within short order. So we hope you check us out at Appraiser eLearning. Okay, Jeff, back to business.
Mm-hmm.
Talk about how this thing works. Okay. I'm an appraiser out there. I'm someone watching this webinar right now. And I said, well, maybe I would give it a crack. I don't know. I mean, it sounds kind of interesting. I like the part about doing appraisals while I sit on the beach. I mean, that sounds pretty good. So how does it work? I mean, somebody is driving by the property or doing an inspection, I assume.
Hmm.
And so how do I know what they saw? How do they go in it? Do they drive by it? Tell me just kind of how the process works for the folks watching.
So there's a variety of ways we obtain the inspection and photos. Um, like I said, a lot of this is being done in the default servicing arena. So if a property has already been foreclosed on, let's say by a servicer or a lender, um, they maintain the property. They have property preservation companies that manage the upkeep, make sure the property is secure. So a lot of times they'll provide. Usually, it's an overabundance of photos.
Okay.
You know,
And so this is interior photos as well.
some if that's what they require. Some
Okay.
have property preservation companies that provide. I'm talking 20, 30 photos of the
Great.
interior and exterior.
Great.
And they visit the property on a reoccurring basis just to make sure it's secure. Nobody has stolen the copper. Um,
Right.
but then you also have situations where it's just an external inspection, and that's usually either done by an inspection company, and those are a couple companies that just offer inspection services. It's usually by real estate professional, general contractor, and the like. Um, but they'll do an exterior inspection. There's usually a small questionnaire that goes along with it. So they'll take your front on shot, your street photos, um, side view if you can get it. Um, we do ask them questions as far as any kind of noticeable deferred maintenance, any damages, any type of external inadequacy. Is it on a traffic street, commercial, industrial influence, etc. Um, there's about a dozen questions that are asked. So when we get that information, that all is fed to the appraiser. So they have as many pictures uh, as we can gather,
Mhm.
as well as information about any type of, like I said, deferred maintenance, repairs, external inadequacies, etc.
Okay. And then so now I'm the new desktop appraisal guy for you. All right.
Yep. Yep.
And I get my first one, and it's for a decision making process relative to default servicing.
Hmm.
And you send me all these pictures in this report. What do I do now? I mean, I can draw some conclusions from that, but are we doing a sales comparison approach? Do we do a cost approach? Do I do an income approach? Is it a qualitative approach? Is it a quantitative approach? What are we looking at?
So it's really based on sales comparison.
Okay.
Obviously, the appraiser can add cost approach, income approach, if applicable.
Okay.
Uh, Again, going back to USPAP,
There you go.
either on a restricted report or an appraisal report, you do need to comment on the methods and techniques used and not used,
Sure.
and the reasoning behind that. Um, and it's not just because I was told so. It's the same, it falls along the same lines as owner occupied area, et cetera, et cetera. We
Right.
don't do these on units.
Okay.
There's some, there's some restrictions that the clients and the providers put on these.
So your
Mixed use.
products are single family
It's
resident.
really, yeah, it's
Okay.
really just meant for a cookie cutter, single family condo PUD. Um, but we engage the appraiser the same way we engage an appraiser for a URAR inspection.
Okay.
So you've got to be local in your market. There's geographic competency. You have to have MLS. You have to have all that rich data that you do as if you were doing a full blown URAR.
Right.
That's the inspection. That's what we require of our appraisers. So we're not going to ask you to do something out of your market area.
Okay.
So you do have the expert experience in that market.
Okay. Are these desktop appraisals, are they considered an appraisal report, or do they fall under a restricted appraisal report? Most of the ones you've seen are the ones with your company. I know they could be either.
So the way I have it set up with the the software companies
Hmm.
is on the top where you click restricted appraisal report or appraisal report. Whichever the appraiser selects kind of adjusts the scope that I have. And I always tell appraisers, it's not up to me to write your scope. I
Okay.
have it there just as a placeholder.
Right.
I encourage every appraiser to write their own scope, their own limiting conditions. I wish everybody would. Uh, but if you check, restricted appraisal report or appraisal report, it changes the scope a bit. There's a lot of information on my form. Um,
Gotcha.
so the problem we have as an appraisal management company, you look at states like Illinois, who have issued some guidance, either through their coalition, uh, but they have said that they define the client as the individual that engages you for that assignment.
Right.
So the AMC is your client. We're not the agent for the client. We're not the agent for the lender. We are the client. So because the restricted appraisal report has those limitations with only the user being the client,
Right. Restricted.
um,
Yeah.
right? We had to have that option for states like Illinois that the appraiser could provide this as an appraisal report. Again,
Gotcha.
falling back on standard one, you still have to have all that information in your work file that if asked, you could prepare a complete report. But we leave that up to the appraiser on on how they deliver that report.
Okay. So my understanding is the sales comparison approach is required. That's what it sounds like.
Mm-hmm.
The cost approach or income approach, they can do those, and if they don't, they explain why they don't.
Exactly.
In your sales comparison approach, are those done in a quantitative analysis like we do on the URAR where we're making dollar amount adjustments?
Yes, they're
Or
all gridded and there's room for adjustments. It's
okay,
not just a superior, equal, inferior.
okay.
There are placeholders for adjustments.
I believe there are some companies that will allow for a qualitative analysis. If I understand, have you seen those?
Oh yeah, no, I've
Okay,
absolutely seen them. And again, if you go into whatever software package you have and search the desktop products, there's a lot. I mean, the Appraisal Institute has a form. A lot of different lenders have forms. A lot of AMCs have forms. There's a lot of forms to look over.
right. So what I'm referring to for the viewers,
Hmm.
what you've done and what you've been taught to do is what's called a quantitative analysis,
Right,
where you're
right.
making
Yep,
mechanical dollar adjustments,
right.
or it could be a percentage adjustment. But there's another technique called a qualitative analysis where
Yep,
you don't make a dollar adjustment. You just say inferior or superior or equal or similar. And
right.
there are desktop companies, desktop products that use that format as opposed to a quantitative.
Yep.
We've got some questions, so let me just ask you a few of those. Um, I will say to appraisers, though, I don't know, 18% of the folks, actually it's more than that, that says, hey, I've got to do an inspection. I just want to remind you that um, sometimes you're not able to do an inspection. Maybe the house doesn't exist. We were taught that it's okay to do new construction, and you go out there and you take a picture of the dirt. It's not uncommon for commercial appraisers, if they're appraising a large property, you've got 400 units. Are you going to physically go look at 400 units? Or if you were going to appraise the Opera Land Hotel, I don't know if you've been there, Jeff. It's a big, it's like a city under a roof here in Nashville. You're probably not going to look at all 2,800 rooms and eight restaurants, and God forbid you measure the thing. It'd take you a year and you'd still be wrong, right?
Right, right.
So let me ask you a couple of questions here. Um, Chuck asked, would you be able to provide a redacted desktop example? I know you said you can find those other places.
I've got my form available that is a blank form. I mean, if you want to get an idea what it looks like.
Okay, so if somebody wants a copy of that, they could reach out to you via email or something and get that.
Absolutely, absolutely.
Okay. While I'm getting another question, why don't you go ahead and repeat your email address for all those watching?
It's J Dickstein. It's DICKSTEIN at protk.com.
Okay, Jeff, I have a question from Jeff. Jeff asked, how long is the learning curve, and do you get lots of revisions requested? I have several clients wanting me to do these, but I guess he hasn't been doing them as of yet.
Right. The learning curve is not big at all. It's, if you take a look at my form, it looks very similar to a URAR, just the way I have it set up and structured, the same flow, the same grid. So it's not foreign. And again, that's just my form. As far as revisions, we don't see a lot of revisions. And again, because it's not being underwritten for a new money transaction. Again, a lot of times it could be a loan that's in loss mitigation. Maybe the servicer or the lender is trying to decide, do we do a loan workout? Do we foreclose? What is our loss severity going to be on this? They just want to get an idea of the market value of the asset they have. So it's not being underwritten for an extension of credit. So we don't see those kind of revision requests for, well, what about this comp, or what about this comp? And we don't see that because it's not being underwritten for that type of financing.
Okay. So relatively low number of revisions is
relatively
what I'm
low.
hearing.
And again, the biggest revision requests we get are for use PAP issues.
Sure.
A commentary.
All right. And I've got a real long comment with a question here, and I want to get to it because it really is good.
Mm-hmm.
But let me ask you a couple of these other ones first.
Sure.
Colin asked, does ProTech accept trainees for this model?
Well, because trainees are not on the National Registry,
right?
We can't put them on our panel.
Okay.
I would like every trainee in the country to work with us, as long as you've got a proper supervisor. We can engage the supervisor. As far as trainee use, that is really a client restriction we have. ProTech ourselves, we do not have any restriction on trainee use.
Okay.
It's some of our clients still do. But as far as, we cannot directly engage a trainee because these are appraisals and they have to be compliant with FIREA. They have to be done by a credentialed appraiser, but there is a signature space on the left and signature space on the right. So if you've got a supervisor appraisal that's willing to work with you on that, I'm wholeheartedly for it.
So as a supervisor, I could have a trainee assist me or provide a significant amount or do the whole thing, as long as I review that. As it's a big responsibility being a supervisor, and the problem is
you are responsible.
A lot of you're ultimately responsible, yes, and the problem is, a lot of supervisors don't supervise. It is a big responsibility, and if you're going to take that on, you need to take that seriously, and you need to do your job. You need to supervise.
Absolutely.
So with that being said, if I'm hearing you right, Jeff, and this is Fannie Mae's position on a URAR, it's a lot of the clients want the certified folks going out, and I think that increased after the housing crisis, which we need to, that's a whole nother topic. Mm-hmm. As a business owner, if I'm bringing on someone, I need to try to find out how they're going to provide me a benefit to the business owner. Otherwise, if I've got to go visit everything, I might as well just do it myself. But it's sounding like to me, as long as I either list them in the certification and a summary of what they did, or if I sign on the right, you guys are okay with that?
Absolutely.
Okay, great. A few more questions, and I hate to bombard you, but they're coming in, buddy. So Helen asked, do you mandate that the appraiser contact the borrower by phone?
No.
Do you mandate that the appraiser contact the borrower by phone? Do you have reconsideration? Oh, do you have a reconsideration of value is her other question.
On the desktop product, we don't see any of that.
Okay.
Again, because there's no borrower, there's no seller. The homeowner at this point is usually out of the picture.
Okay.
On short sales, we might see a little bit of it. And the funny thing about short sales is the value is too high because they're trying to negotiate a short sale, and obviously they want to see a lower value.
Yeah. Yeah. I
So
was about to say, well,
yeah,
what's your definition of too
yeah,
high, right?
it's funny. They want you to use the lowest sales transactions in the state.
Lisa asked, are these ordered in rural markets as well, or typically more in a metro area?
We see them more in suburban, urban suburban. Rural is tough only because of the availability of data.
Right.
If you're in a rural market and you have enough data to support that, we can definitely do that. But at the end of the day, it really comes down to data availability.
Right. All right. I'm going to read this long one to you. Are you ready? You can get a sip of coffee or whatever you want to do. And I have an answer. I have an answer for this.
Okay.
I always tell people, be careful when you ask me for my opinion,
right.
because
you're going to get it.
I'm going to give it to you. Right. But no, this is a really, really, really good question. And it's a little lengthy. So I apologize in advance. Okay. Number one, this is from David. And number one, he says, I have no problem performing a desktop as long as I have some basis for my extraordinary assumption. This could be a realtor inspection, a past appraisal, or a recent listing that contains photos. I have a problem relying totally on tax cards in my area. The assessor's office readily admits that they've never been inside the property. Number two, my problem is where I am asked to perform a desktop or a drive-by with absolutely no source for what's inside. Here are the USPAP citations I'm concerned with. Standard Rule 1E, comment lines 481 through 485, and Standard Rule 1F, lines 496 and 497. So I'm going to let you answer that first, and then I'll tell you my thoughts on it.
Extraordinary assumption.
Yeah.
I cannot say it enough. You're relying on outside information to make your opinion of value.
And I think that's what he says. If he's got a realtor inspection, if he's got a past appraisal or something that he feels decent on with that, he's fine with that. His problem is if there's known issues with his data source. And my answer to that would be, there are some instances where you may have to simply withdraw from an assignment as the appraiser. Absolutely. You may have to call Jeff or whomever your client is and say, look, there's not a reliable data source to rely on. Mm-hmm. So we've got to do one of two things. We're going to have to extend our scope on this. I need an interior access, or you need to get me a prior appraisal or something, or I simply need to withdraw from the assignment.
Yep.
And sometimes if you push those clients or at least communicate with them, I can't tell you how many times I've had reviews where I've been able to say, I don't know what's going on the inside, or a desktop or a drive-by, something like that. And I'll say, I'm going to have to withdraw from this assignment, or you're going to have to let me in the house. And then suddenly they say, oh, well, wait, we've got an old appraisal report we can send you. Let me, for foreclosure, and in your default area, Jeff, I would think at some point in time, there probably was an appraisal, even if it dates back to pulling out when they bought the property.
Yep. The problem with that is so many times these loans have been sold and resold and resold and resold. Sometimes that origination appraisal has been scanned and photographed and rescanned. Your pictures are nothing more than a Rorschach ink blot. I'd love to think that everything was a first generation PDF and we can get that, but obviously there's exceptions. If you don't feel as an appraiser that you can provide a report that is not misleading, we don't want you to accept it. Look, I'm an appraiser. I don't want to put any appraiser at risk with their state boards, with clients. I was at the Aero conference last week, which is the Association of Appraisal Regulatory Officials. And again, the state boards, their biggest complaint is non-compliance with USPAP. So if you make those extraordinary assumptions and you've got support for the appraisal you're completing, and it's not misleading, it's that's what they're looking for.
Right, right. A couple of other questions. Gene, oh, they're bouncing me around here. Jeannie asked, we've been doing desktop appraisals for a little bit now. We only get one here or there. When is the volume going to kind of pick up?
I would love more volume. Are you kidding me? It's geographic. It's really hit and miss. Obviously, these are, like I said, most of these that we do, my company, are for the default servicing market. So some of these companies don't do desktops because they might rely on AVMs. If you're in a market area that's pretty data rich, and again, the risk is low to them, they might just use an AVM. They might use an evaluation. They might, they might have different ways of doing things. So it's really up to,
right. Yeah, I was just going to echo what you said, and they may use something other than an appraisal services.
Right.
So this is a way to kind of diversify your practice a little bit. JC asked, what is the difference between a comp check and a desktop? Well, I'll let you have that one.
Comp checks are an appraisal, aren't they? You're doing the search parameters, and most comp checks I've seen don't have a certification in scope and are not signed. A desktop appraisal is an appraisal.
Yeah, I used to be. We tease this a little bit, but we don't get, as appraisers, we don't get that many calls anymore. Do you
No.
pre-comp?
We
used to get them all the time.
Oh yeah, I haven't seen that in years and years.
And somebody would call me up and say, "Hey Brian, do you pre-comp?" I said, "Yes, I do." As soon as you prepay, I'll pre-comp.
You'll see it on my final report.
It's an appraisal, for crying out loud.
Yep.
And then again, another whole topic we could speak on. Could you provide sales data for a particular area or subdivision? Sure, that's fact, right?
Yep. Absolutely.
A sale price is factual data, and you can share that.
I had that conversation just last week. The difference between a comp and market data.
There you go. There you go. Yeah, a sale is something that actually occurred. It is a fact. When you talk about comp, now you're making an intellectual decision as to what is comparable and what is not comparable, and that's why it's an opinion, right?
Absolutely.
So let me give you a couple more questions, and we're running out of time already, Jeff. It seems like we just got started.
Right.
So we may have to have you back on again in the future. But let me ask you a couple of questions. Robert asked this: how can you send out, let's say, 6 desktop appraisals, having to verify the sales with a third party?
Again, that's to each appraiser. We do it in their market area. Comes out to how quickly they can contact to verify those sales, how they verify them. It's, each appraiser has their own way of verifying sales.
Sure.
I don't direct appraisers how to do their job.
There you go. Well, guys, we've run out of time. If you have any further questions, we'll try and get those over to Jeff. I would like to thank our guests today on this kind of interesting and hot topic, if you will. As you heard, that right now Jeff's focusing on the default sector. It's default servicing. The loan is either in foreclosure or maybe it's about to go into foreclosure, and they want a value opinion. They have a problem. And their value problem is, what is this property worth? Maybe you can't access the property. Maybe they can. Maybe they've had a cleanup crew come in and clean it up and can provide you with photographs. I envision that we're going to see more and more of these, Jeff. I may be wrong. What's your prediction for the future?
We're definitely getting more inquiries as to the type of desktop products we offer. So I know it's out there.
Probably appraisers are the ones resisting the most, would you say?
Initially, like you said, when you first heard of these, you had your 1004 URAR
Sure.
business,
Right.
and that's usually the feedback we get is, well, I won't do that, but I'll give you a 2055.
Right. Sure.
And
Sure.
and then once they get into it and they see the nuts and bolts of it, they go back and read standard two, and they see that they can do these things, and they read the FAQs and advisory opinion two about inspections. Um, they really do gravitate towards them, and I think it's a nice addition to a business model.
It's another tool in your toolbox, if you will.
Absolutely, absolutely.
Believe it or not, folks, you can even do an oral report. That's
What?
another topic. That's another topic. We'll have you back for that. Again, I'd like to thank my guest, Mr. Jeff Dickstein. Jeff, one final time, let folks know how they can reach out to you if they'd like to.
Email is jdickstein, DICKSTEIN, at PROTK.com. I'll be at the Appraisal Summit next week. I'm speaking Thursday if you want to tap me on the shoulder. And the Board of Trustees meeting for the Appraisal Foundation Friday and Saturday in Scottsdale.
Thanks again, Jeff. Thanks, Jeff. Thanks for all the viewers. My name is Brian Reynolds with the Appraisal Report, again brought to you by Appraiser eLearning. Until next month, stay safe out there. Click those pictures and go do your inspection if you want to. But think about keeping an open mind, as Jeff said. Have a great week, folks. Talk to you soon.